On a Monday morning, stock markets open in chaos. Oil prices explode. Banks freeze international payments. Governments call emergency meetings before most people have even finished breakfast. The US dollar, the currency behind nearly every major trade, investment, and financial system on Earth, has suddenly lost the world's confidence. No missile was launched. No country was invaded. Yet within hours, billions of people feel the shock. Because when the world's reserve currency starts to crack, almost nothing stays untouched. So the real question isn't whether America would suffer. It's why the entire world could fall with it. By the end of this video, you'll understand why the US dollar became the most powerful currency in history, why countries that publicly criticize America still depend on it, why many nations are quietly trying to reduce that dependence, and what would actually happen, not in theory, but in the real economy, if the dollar suddenly lost its dominance. Here's the first surprise. Less than 5% of the world's population lives in the United States. Yet the dollar plays a role in nearly 90% of global foreign exchange transactions. That isn't just influence, it's financial gravity. But gravity only works until something bigger begins pulling in another direction. The currency that rules the world. Walk into a coffee shop in Brazil, a factory in Vietnam, an oil field in Saudi Arabia, or a shipping port in Singapore. The languages are different. The cultures couldn't be more different. Yet behind millions of transactions, one currency quietly connects them all: the US dollar.
The world's reserve currency became backed by something far less tangible: confidence. At first, many believed the dollar's reign was over. But something unexpected happened. It became even stronger. Why? Because another deal was quietly being built behind the scenes, and it centered on the one resource every economy desperately needed: oil. The hidden deal that changed everything. During the 1970s oil crisis, energy had become the lifeblood of every industrial nation. Without oil, factories stopped. Planes stayed grounded. Food became more expensive. Economic growth slowed. America reached a strategic agreement with Saudi Arabia. Oil exports would be priced primarily in US dollars. In return, the United States provided security and military support. Soon, most global oil trade followed the same pattern. If Japan wanted oil, it needed dollars. If Germany wanted oil, it needed dollars. If India wanted oil, it needed dollars. Suddenly, every nation needed large dollar reserves, even if they rarely traded directly with America. This created a powerful cycle. Countries earned dollars through exports. They invested those dollars into US Treasury bonds. America borrowed more cheaply. The global financial system grew even more dependent on the dollar. But every powerful system creates incentives for others to challenge it. And over the last decade, that challenge has quietly begun. The world starts looking for alternatives. The shift didn't begin with one dramatic announcement. It began with small decisions. China expanded trade using its own currency. Russia reduced parts of its dollar reserves after sanctions. Some countries experimented with local currency trade agreements. Central banks started buying record amounts of gold. Even discussions around digital currencies gained momentum. At first, these looked like isolated events. But together, they revealed a larger trend. Many governments weren't trying to destroy the dollar overnight. They were trying to reduce the risk of depending on a single currency. Because dependence creates vulnerability. If access to dollars becomes difficult, entire
economies can struggle to pay for imports. Businesses face higher costs. Consumers face higher prices. Diversification isn't always about replacing the dollar. Sometimes it's simply about having another option. But here's where the story takes an unexpected turn. Even as countries searched for alternatives, the dollar often became stronger during global crises. Why? Because fear changes human behavior. And that brings us to the biggest misunderstanding of all: why the dollar is still so powerful. Most people think the dollar dominates because America says so. That's only part of the story. The deeper reason is trust. Global investors want markets that are deep, liquid, and relatively predictable. The United States offers one of the world's largest government bond markets. Its financial institutions remain highly influential. Its legal system, despite criticism, is viewed by many investors as more predictable than many alternatives. During financial crises, investors often sell risky assets, then buy dollars. Not because everything in America is perfect, but because they believe other options carry even greater uncertainty. This creates a remarkable paradox. Bad global news can actually increase demand for the dollar,